The higher standard deduction is also made permanent. The standard deductions that we have seen since 2018 are much higher than they had historically been before the TCJA. But those higher standard deductions were set to expire after 2025, and so therefore they would then revert to their previous lower amounts. But the new law makes those increased, larger standard deductions permanent with inflation adjustments. And it also set what the 2025 standard deduction amounts are. So those are shown on your screen. For married filing joint and qualifying surviving spouse, it's $31,500. For single or married filing separately, it's half of the married filing joint amount, so it's $15,750. And for head of household, it's right in between those two. It is $23,625. Personal exemptions. Prior to 2018, there were personal exemptions that everybody got. The TCJA temporarily suspended those personal exemptions. So what would happen is everyone on the tax return, meaning if you're single, it'd just be you, you'd get a personal exemption for yourself. If you're married, filing jointly, you and your spouse would each get a personal exemption. If you had any dependents, then each dependent, you would get a personal exemption for them. And a personal exemption was just an extra deduction that you got for each person on the tax return. So that's the scheme that we had prior to 2018. So you had a lower standard deduction, but then you got a personal exemption for each person on the tax return. What the TCJA did starting in 2018 was it took away that personal exemption, but it increased the standard deduction. But again, all of that was just temporary through 2025. So, what the new law does is, as we've already seen, it keeps the higher standard deduction, but it is also making permanent the elimination of those personal exemptions. So, we are not going to have the personal exemptions, except for one thing that they did add. Congress added in this new law a temporary exemption for seniors. So, you may remember when this law was being debated, many people, including the president, wanted to end the income tax on Social Security. You might remember that's one of the things that he was saying out on the campaign trail is that we're going to eliminate income tax on Social Security. Well, for a lot of reasons, political reasons and legal reasons, they were not able to actually say that your Social Security is not taxable. They couldn't do that. So, what they did instead is they put in this exemption for seniors. Now, it's not tied to receiving Social Security. So some people are under age 65, but they receive Social Security, but they are not going to get this exemption. Other people are age 65, but they don't receive Social Security. They will get this exemption. What it is a $6,000 exemption per person who is age 65 or older. So if you're a married couple, you're both age 65 or older, then you will get double the exemption. You'll get $12,000 exemption instead of $6,000. Now, this $6,000 amount is not adjusted for inflation, and it does get reduced for higher income taxpayers. So it is reduced by 6% of your modified adjusted gross income that exceeds $75,000, or if you are married filing jointly, $150,000. In order to get this exemption, you must have a Social Security number and you must put it on the tax return. And it is only set right now for tax years 2025 through 2028. So, unless Congress acts before then, this will expire after the 2028 tax year. And again, all this is an extra deduction for people who are age 65 or older, and it is called an exemption. And that, my friends, is going to do it. Thank you for joining me. And if you have any questions, leave them in the comments. In the meantime, have a great day, and I will see you in the next one.